dang right that it's the real life stock review day. Today is Friday, which means it's your boy, Jeremy Alexander Newsom with RealLifeTrade.com, coming at you with a free stock market review. What in the world? What? Man, volatility is in the building. All right, well, some good news and some bad news. It's mostly bad news, but looking over at the markets, seeing what we got. We have an obvious, pretty massive selling day today, and this is the SPY that we're looking at right now, and yeah, we're down 2%. Yesterday was an immaculate gap on the SPY, so let's just talk about this gap. And yesterday had just a very, very beautiful gap down. So the challenge was, this was a spot that we were going to bounce, right? And so we did try to buy the bounce there. And we tried to do that with call options, and we did get stopped out at open for a 2R loss. Now, there's been a lot of losing swing trades over the last 3 or 4 days. But that's okay, right? Cash is a position as well. So with that gap down, right, obviously we did not bounce there, and that turned into a bear flag, right? You had 2 days with sideways movement right at the 100, and you had 3 days, right, where lower shadow, perfect doji, lower shadow, nice little flag, nice little pennant pattern, whatever you want to call it. And this gap action, I mean, this gap was right below the 100. It was right below that wick. It was just a nice perfect storm for any kind of support to be breached. So bottom line, yesterday was a lot of selling. And yesterday in the afternoon trading room, I was like, hey guys, let's go bearish with some puts. It needs to trigger tomorrow because we're going to get down to the 200 within days. I didn't think it was going to be 1 day, but I said maybe 2 or 3. And it got very close to getting filled on those puts. Unfortunately, I had them a little bit high, I guess, on the SPY. It traded right into the low, right there. The low of that white candle was pretty much old support, new resistance. So there's obviously some serious selling we've been talking about the last few days in the trading room, and this gap down, really yesterday was the one that just signaled a lot of selling because there's a lot of people trapped on the SPY. And now, the interesting part is, are we going to be stopping down here? That's what everyone wants to know. We made it to the 200. Last time we hit the 200, we bounced. This time we closed. This is a level of which we've bounced off of before. And we could go a little bit lower. We'd probably get a doji. I don't think we bounced exactly off the 200. But we could probably do something like this and then trade a little bit higher. But what I like about it for my credit spread fans is this is still a fantastic time for option selling. So let me kind of go over really quick. I'm going to do this. I'm going to go to a monthly chart. I'm going to hide this and just look over some stuff, because here's my thoughts on the overall market and just kind of give you a broader viewpoint of really what's going on. We had a massively, just a phenomenal bullish move, bullish trend from 2000, let's call it late 2011 to 2015 really. And then we trade sideways in a distribution phase that was very, very choppy. In fact, let me do it with different colors because there's a reason to this. So we're going to do this with red. And then, again, as you all know, 2016, 2017, pretty easy to make money in some swing trades or just longer term trades. And then now, what we're definitely into is that we're in another distribution phase. So in the purple areas were great for long-term calls, right, like leaps and whatnot, swing trades, swing trading, put sales worked out really, really well, and just your general buying the dip, strong trend, working out nicely. Now, the crazy part is in the purple, day trading was okay, and credit spreads were okay because volatility was very low. I did almost no bear call spreads, nothing bearish really during that, almost any of the purple lines. Volatility was low, credit spreads were okay. They really didn't work that great. It was just a lot of put sales, a lot of owning stock, a lot of swing trades, a lot of longer term calls, covered calls. People were having a blast. Now, in red, we are in a different market as of now, and we're going to be in here for a little while. This is not the end. We have a few more months to go of this. So in red, this is my thought, as I've been mentioning in the trading rooms for a while. Here's the #1 strategy you're going to want to focus a lot of your attention on. Ready for this? Day trading. This is going to be a lot of volatility, And if you want to learn how to day trade, I know a place that will teach you for free. And I also know a really cool, awesome, exciting, friendly, no judgment-free zone trading room that is on Monday through Friday from 9 to 2 Eastern that covers and talks about day tradings and setups and entries and exits and when and where and how. So that's going to be probably the best strategy is going to be day trading. Now that's not only just stocks, that can also be futures. All right, so futures is going to be really, really exciting. We also do have a futures program as well. And I would say number 2 is going to be option selling, right? A lot of condors, bull put spreads, and bear call spreads because volatility is here. So swing trading will be rough. It's just going to be a challenge. Swing trading this month in March has been deplorable for me. And I'll give you some exact stats in a little bit, but swing trading will be a challenge, no question. The better part also will end up being your long-term positions. Long-term, boring. You're not going to be doing that much. You're just going to be holding through a lot. You're going to see a lot of chop. Your account's going to be probably sideways to not exciting for the next year or so. And again, you can do a lot of option selling to kind of differentiate that, like covered calls, protective puts, get into collar strategies, get the dividends, just let it ride out kind of thing. Because this is a healthy move and it seems very reminiscent of this kind of volatility back here, which is exactly what I said not too long ago, that we're going to have a market pretty similar to what we got when there's nothing goes up forever, right? You're going to have to get some type of volatility. So how low do we go? How bad does it get? I wish I knew exactly. I really do. Obviously, no one knows, unfortunately. But the overall thought is we can just trade our plans, focus on what we want to focus on. In my opinion, these two will probably be the best things, and I've increased my option selling dramatically. My day trading is, I've always day traded pretty much the same. And swing trading, I've been cutting back on, and long term, I'm just holding out, just letting it do whatever it's going to be doing. So you're going to try to buy things as cheap as you can. You're going to want to sell them as high as you can. You're going to want to be quick. You're going to want to be fast and nimble. And if you are if you're scared, afraid, worried, panicked, or terrified, take small positions, buy as low as you absolutely can, hold on to those positions, and this might be a year where in the very beginning of January 2018, this year, when I had the webinar, is actually December 29th, I was mentioning that one of two things was going to happen this year. Either we were going to get just a continuation higher, which seemed less likely, and then 2019 and 20 would be very choppy. Or we would get a very nice choppy 2018, maybe even 2019, and then 2020, 2021 will be pretty exciting. I still am on that boat. I think it makes sense for that to occur. Could we get some really crazy massive selling in the markets between now and then? Sure. But I can absolutely say without a doubt that I can teach you how to protect yourself in these markets, in these volatile markets, long-term, short-term. If you're in cash overnight and you're day trading and a lot of your positions are protected because you're in cash and you're just ready for the next day, that'll also be strong. But for my longer term traders, if you are young, and I'm classifying young by anything under 59 and a half, go find some really good deals. Find some stocks that you want to buy them as cheap as you can, hold on to them and see how you're going to get a chance to play that out. So that's just really my thoughts on the broader picture. I'm not panicking. It's just a natural, healthy flow. And but at the same time, the same instance, I mean, we trade down to a really good target, really good support, and I see what you're looking at. This is definitely a double top of sorts, and we could get a little bit worse from here, but we could bounce up, right? Get a little bit of an inside candle, and we could do this and come all the way back to the top. That's also plausible. We could trade sideways for 3 or 4 days, break down into here, break down a little bit farther into kind of no man's land, like a 240 area, and then we start bouncing. That's very possible. Those are probably the two most likely scenarios. I mean, another scenario would, I'm trying to figure out what it would possibly be. I mean, we're not going to just keep tanking without some type of retracement. So I guess, yeah, if we trade up maybe a little bit higher and then roll over, I mean, I guess that would really be the third choice. But one of those three situations is likely going to happen, and it's probably going to be red or purple. I don't see black occurring immediately, but how are we going to know? That's the most beautiful part. The only way you're going to know is be in now. And if black occurs, we're going to make some good money, right? That's fantastic. That's wonderful. If it doesn't happen, red and purple, we get stopped out. We lose a little bit of money. We see if we can flip some positions and kind of move forward. So that's the SPY. A lot of interesting things happening in the market. This is a fantastic time to be a day trader. Incredible time to be a part of the markets. I love this gap on the Dow Jones. So if I turn my drawings back on, there was a very nice consolidation, and it was just trading sideways and trading sideways and trading sideways, and then you got this gap. I mean, that is a retest gap. You got a lot of retests. There were some very good signals out there on some of these indices to to start going bearish the last 2 or 3 days. IWM, so IWM just traded right up back to its previous resistance right here and started getting some selling. And again, we could come right back down to this 145 area, probably will, and then some dips, some buying opportunities, however you want to play it. Again, long term, the short term swings are going to be hard. They're going to be a challenge. So let me just kind of give you the base case I can over the last 2 days scenario. So Southwest, I had some bullish trades on Southwest, and I deleted those lines because we looked over those yesterday. But we had an entry here, we had a stop here, and we got stopped out on Southwest yesterday for a loss. Not yesterday, sorry. That was the 21st of March. So that was what, Wednesday. So Wednesday, Southwest, I got stopped out for some losses. And that was pretty much a pretty lame day. So I had 3 hours of losses on that day, because I also got stopped out of Morgan Stanley. Now, I'm happy to get stopped out of Morgan Stanley because we can see what occurred, right? I tried to go bullish. It just simply didn't work. Old resistance, boom, boom, boom. Traded to support, didn't bounce, or at least didn't bounce strongly. And then when it gapped down yesterday, I was like, hey guys, we were trapped. And what I will do is at the end of this, at the end of this recording, I will kind of put in a little bit of what I was chatting about yesterday for those who want to watch it. I know this is a little bit of a longer stock review, but I will be putting in kind of my message and my thought process regarding what was happening and what some traders were thinking and feeling. And I'll put that in the end of this that's what the markets were doing yesterday. So I really didn't get mine stopped out of Morgan Stanley yesterday. As I mentioned, I got stopped out of SPY. All the day trades just going against, all the swing trades that were going against me. So I think over the last, let's say today, yesterday, and Wednesday, I think I lost 6 Rs in swing trades, but we did have some day trades that worked out for us. So, but again, last 3 days, here's a trade on General Motors. Randomly, I did have one bearish swing trade out there. Here's GM. And GM, this was a bearish swing trade that I guess I exited a little bit early, unfortunately. But we had a really good setup on this one. Here's the weekly chart. The reason I exited there is because that was the 100 simple on the weekly. I thought we would at least pause there a little bit longer. But the initial entry is there at 37.53 with a stop. The original stop was right there. And so we made good on General Motors. That was a good winning bearish swing trade. So that helped. That was a 1.3 Rs in the right direction. And then some of the trades on ABBV just yesterday. ABBV, phenomenal bearish retest gap. Black candle, gapping down below the 100. This was also an official call out in the morning trading room. And this was the rollover. Blake played it pretty much entry here, stop here. Had a really good breakdown. This is how I played it. A little bit of a rollover, entry there, stop there. On ABBV, played Apple for a small gain, played Darden Restaurants for a small gain. Google, I missed Google yesterday by pennies on the dollar, literally 10 cents. Here's the low of the day on Google from just yesterday, and when that broke down, that was my entry, that black line. My stop was up here, and that entry, the high of that candle, I'll remember that for a while, was 1071.85. My entry was 1071.95. So I missed that by 10 cents. So that was pretty brutal. But earlier today, here's the daily chart on Google. I do have a bull put spread on Google, which is below the 200 simple moving average. And with this gap, so this is a very nice gap action. White candle, gapping down. That's a gap and go on Google. I mean, just sitting at right there at the 100. Obviously, people are trying to buy off the 100 because that's what they do. And they're trapped. right? They are trapped, they're scared, they're losing money, they are selling. Very good sell signal on Google. And as it broke below 1043, trades to the 200, I did have a put triggered into there to mostly just protect myself on this particular spread, because I'm in a bull put spread on Google under the 200 simple moving average. So we'll see if that actually does in fact end up bouncing. But that particular put purchase exited it as well, pretty much right at the end of the day for a decent gain. Really wasn't bad, about 25% return on the actual option. I used a regular April 1045, it's pretty expensive. But that one worked out decently okay, and again, that'll help prevent any loss in that particular bull put spread. But here's Baidu, and all was not lost because I did have a bear call spread on Baidu, and this particular bear call spread was based on this evening star reversal pattern right here. It's a 280, 290 bear call spread, and I sold that for $1.30, which is about 13%. I was able to buy that back today for about 28 cents. So that that bear call spread helped make about 0.4 Rs back. It's a pretty decent trade, nice little bear call spread. And then the rest out there, I don't have a massive amount of swing trades right now. We have OKTA, which probably will get stopped out, but you know, it was holding up pretty decently until the whole market just started crashing. We had BB, which obviously is not going to trigger, so we're going to cancel that today. That was a bullish gap and go the other day that just simply didn't work. And had AAP that we got out of today, Advanced Auto Parts. So we did get out of that earlier this morning. So yeah, overall, I mean, this has been an absolute battle. Just Wednesday, I think I was like 10.11 Rs. I should say Tuesday afternoon. And as of today, after commissions, after all these trades, I'm sitting at 6.83. Sorry, it's a really weird 8. 6.83. So, you know, and there are times in the market where things are crazy. There's times things are wild. That's what we love about the market. I mean, how exciting is this? This is the only market in the world that can fluctuate 10%, right, in days. I mean, if the real estate market fluctuated 10%, if you lost 10% of your house in a week and a half, you wouldn't know what the heck is going on. So, yeah, it's pretty wild, pretty intense, but we're having a blast. One trader, Anthony, made 8 Rs on SPY. Let me slide up to here. So here goes, 222, first 8R trade off the SPY breakdowns, right? So we were talking about it this morning, talking about the markets were definitely looking weak. Here's Amazon, AMZN, and I posted this on Amazon. I missed a trade on Amazon by pennies today, but I posted this one just yesterday. This is an evening star reversal. There was a lot of real life traders who got in bullish off of the 20 EMA here on Amazon. And with that evening star, with that gap, I posted this in TradingView. I was like, guys, I think based on the tariff news, this is actually probably a little bit bearish. And I think Amazon is going to continue a little bit lower. So here's my official post on Amazon. Let me scroll up here just a little bit. So right here, 1526.90 by 1534.35. And here's the 5 minute. The brutal part about this is had I left that trade open all afternoon, it would have worked out okay, but I rarely do that. So the entry was here, and the stop was right there. So that was the setup on Amazon, the official setup, and that was based on the low of that white candle, low of that white candle, and I did that once this black candle came in. So you'll see this upper shadow, and this upper shadow, none of those triggered, and Amazon rolled over. So I was like, well, you know, obviously I'm going to cancel that trade because it pretty much did everything that I wanted it to do. Well, it did end up coming back up to that exact price and then rolling over again. That would have been a nice 2.3R trade, but I missed that one. So bottom line, folks, you know, take recourse of where you are. The traders out there, the investors, the big boys who have a lot of money, you know, they're down billions. So if you lost a few $1,000s today, it's cool. Regroup, understand what it is, understand why you trade, understand how much you love the markets, and again, feel free to check out the message towards the end of this video. It's coming up right around the corner. I do have a few more requests I want to look at, but overall, guys, just you got to take recourse, right? There's gonna be goods, there's gonna be the bads. You got to understand why you do this. Got to understand why you're in the game, and at the same time, you also have to understand this is definitely by no means worst case scenario. So let's go look at some stocks that were requested. Here's XBI, the Spider Biotech ETF. Most things are going to be pretty bearish, but you got a little bit of a bearish gap and go on the 22nd of March. So here's the long-term moving averages. And again, at this point, just try to buy things as cheaply as you can. So I would say you have an entry probably for some position here at the 100, and then maybe a little bit more down here at the 200 on ticker symbol XBI. But you do have what could be a nice little channel. So just keep in mind, folks, I know things look bearish out there, but we could easily stop and turn right around Monday and just be right back off to the races, create some type of channel. That is possible. We've seen it happen before. I know this feels like the end of the world for some of you, but it's not. This is going to happen again. We're going to get markets like this again. Be in the markets for 5-6 years, and you're going to go through a lot of these. So it's not really that big of a deal. It likely could trade back to some supports. We'll see exactly what transpires on XBI. But again, probably more some type of channel. What's going to be very important in this market, very important, is time frame, right? Time frame and overexposure. Don't get overexposed, and understand your time frame. If you got a job, you got an IRA, and you're funding your account, you're doing fantastic. If you're a full-time trader like myself, you're in the markets often, you're seeing setups, you're placing triggers, but it's still going to be a challenge. It's still going to be a difficulty. So understand your time frames, realize what it is that you're trying to accomplish, and if you do have a job, go get a raise, right? Go ask for a raise, go get more money. If you're a full-time trader, I always mention you absolutely want to have multiple streams of income coming in, because it looks like March will be a little bit of a struggle, but it's okay. We'll see. We still got 4 days left in March. So, if I get one really good trade next week, just one 4-hour trade, I could hit 10 hours for the month. That's usually my goal. So, that would be fantastic, right? Now, if you're not in that particular position or that predicament, it's okay. It's just a little bit of money that you're losing. Learn through this. Figure out what exactly you can learn from this experience, what rules you can build into your plan from this movement, what it can help with, what it allows for, and just kind of really bake that into your plan. And remember that cash is always a good position. Cash is king. Cash is king, folks. We did have a video just recently. Brad posted about rebalancing your portfolio and talking about, if you guys haven't got a chance to check that one out, that's when me and him and all the traders were really discussing the volatility of the market. Let's pull this up. Rebalance your portfolio. Real life trading. I could pull up a videos, but this right here. So we posted it 2 weeks ago. Right, 2 weeks ago, kind of discussing, if you want to sell, lock in some profit up here. Things are going to get pretty hairy. That was pretty much our discussion, and I don't know. I feel like it was a smart call by Brad, and it's buy low, sell high, right? The market's at all-time highs, and you need to lock in your positions. It's all about time frame. So Intel here. Intel was a pretty decent bearish gap and go today. It's a perfect shaved bottom candle, so the low and the close are the exact same. It did close below 49.83, so we will be looking for some bearish opportunities here on Intel for some of my swing traders. So I'll be setting some of those up in the afternoon swing trading room. But yeah, Intel looks a little on the weak side. Now, how far is it going to go? I don't know, probably the 100, right? It might retest up into this level. It looks a little bit double topish, but yeah, I think Intel could slowly peel down and trade into some supports. Skechers, ticker symbol SKX, is down 3.6%, but really Skechers is about to pull into the 100. I got one trader who has Skechers a little bit longer term, and I think worst case scenario, Skechers makes it down to 33.55. So it does look potentially a little double topish. If you're in Skechers, I would consider, or at least look over some potential collars on this one, some covered calls and some protective puts. Here's Qualcomm. Ticker symbol QCOM, and Qualcomm just getting absolutely wrecked. So Qualcomm has been gapping and just shredding this chart. You had a lot of huge buying candle here, which was on news. And there's nothing stopping that candle, right? That's just a huge candle begging to get retraced. And that's exactly what's happening. So the biggest question will be, how long will the bounce last in the market? Because we're going to get one. Is it going to be a day? Is it going to be a high wave candle? What exactly is going to happen? So it's going to be very interesting to see, but we'll find out. Here's WGO. Winnebago just getting shredded. Winnebago, here's the long-term moving averages, and we're probably about to make it to that 33.95 area. Here's the daily chart, and this thing just broke through the long-term moving average on earnings like a boss. This is when you're getting stopped out with this lower shadow if you're doing a shorter term trade, right? It just broke right through, continued lower. It closed below that wick yesterday, and it continued just a little bit lower today. So if I was looking at playing Winnebago, yeah, I'd probably look to, snag some or a little bit around the 100, pick up a small piece, and test out the water, see if she bounces from there. And so the market takes the stairs up and the elevators down. It is quick when she rolls. AMAT. I had a few traders be bullish in AMAT and they got stopped out today, and hey, it's all right. Use your stops. That's what they're there for. It never feels good to get stopped out until sometimes you look back at a chart and go, whoa, that could have been a lot worse, right? Like JP Morgan, strong gap on JP Morgan, back at a support, but we did have a bullish swing trade on JP Morgan and did get stopped out on JP Morgan. So, can we continue down a little bit lower on some stuff? Absolutely. Will we? We'll see. Probably a little bit lower. Yes, probably a little bit lower. But on Monday's going to be a very impactful day because it's going to depend on what that candle looks like. Here's Facebook, ticker symbol FB, and Facebook, folks, made a massive, massive, massive close today. I mean, this is legitimately a concern. Big gap. Remember, this is a gap on a weekly. So this is a weekly gap, trapping people for sure. Huge volume. We likely do retest this level, more than likely. I said likely like twice just then. It probably pulls back into 162. My overall thought process is I'm going to have two setups on this one. One setup for continuation just in case it just keeps going because there's nothing holding up Facebook at this point. And also a trade setup that if it does retest, I might buy some as well. But I'm looking for some bearish continuation in Facebook. If you do have some put sales, because there's a lot of you out there, a lot, who've been playing Facebook like bullish to neutral. And hey, let's make some money on the downside. Let's protect ourselves. I think she's coming for that 100 simple on a weekly, which is about 147. And you can make as much money as you want to between now and then. Just don't overexpose yourself. Remember, understand your time frame. That's a huge close on Facebook. So, folks, I'm going to be hopping into the afternoon swing trading room where instead of just, 15 minutes, you're going to get 60 minutes of me every single day, every single hour. Get in the afternoon room, folks. You guys are amazing. All right, so here's my discussion and chat from just a few days ago, and then that'll be it for me. You guys rock. Bye. You have both those lows on JP Morgan, and you get a break right below those lows. That's a phenomenal time to get short. Now, I didn't trade for this trade. Believe it or not, Ashley was looking at both JP Morgan and Morgan Stanley in her day trading, so she was just trading something entirely different than I was. But this was a great example, right? So when I asked you guys minutes ago, how many of you now know the pain of getting stopped out on a swing trade gap, and there's hundreds of threes in the chat pane? That is the sentiment of day trading, and there's pros and cons to swing trading, right? August through January of last year, everyone was making money hand over fist swing trading. It was easy, it was simple, and we've mentioned before, it's like, guys, this is going to come to an end. Nothing can be this easy, this long. It was just too simple. All right, JP Morgan. I mean, look at these trades: off the 10, off the 20, off the 50, off the 10, 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 and then you get this little shakeup, and that's back in February. That's very recent. And once you have that kind of piercing action, you start getting the volatility back. People start respecting less and less the short-term moving averages, even sometimes longer-term moving averages. What I'm getting at is you have to go back through the trade. If you want to become a great day trader or someone who's able to take advantage of the sentiment, go back in the candles and ask yourself, when would you have gotten in, either bullish or bearish? When would you have gotten in? And it's even better if you're actually in the trade, right? You have to think forward. You have to think future. Meaning, if I'm in JP Morgan, we got triggered into JP Morgan here, and we got out right there before it started hitting our stops, which was a good thing. This gap down, right? That gap down, that nice little open was a really, really strong opportunity to go bearish, right? That's people are getting trapped. So now what happened? And let me post this back on Slack right here. So what's happening on Slack is I'm going to scroll up a little bit. And Luke was asking, what's my target on Apple? So this is 10:43, so pretty much an hour ago. I said, for this day trade, yes, but I'll be exiting this trade now at break even to reevaluate. SPY is about to be finished dropping. So it was at 10:45, so it was about an hour ago. And the reason that I felt like it was about to be dropping is I could feel how excited people were getting in the chat room and in the webinar and in Slack about how bearish the market was. You go on Twitter, everyone's posting about it. You start seeing charts like this pop up over social media. Where's the chart with all the selling? Give me 1 second. So Christian was posting this, right? Everything is red. Everyone's wigging out. You're on Twitter. You're in other chat rooms. You're in other areas, and people are just getting wrecked. And what happens is SPY comes right down to a previous support, at least on the daily chart, right there. Now, I'm not saying it can't break there, and I'm not saying it can't bounce. But if you're day trading, markets very, very rarely just absolutely get pummeled if you're trading into some type of support area. So from here, I mean, yes, it could easily break and we could keep going down, but the SPY is down 1% already. It was at right around 2 earlier. That's massive for one day. Sure, you get the outlier days like this, and you get the days like this and this, but those only happen like once a year. You get those days pretty ill-frequently throughout just regular trading. So here's the 5-minute chart. And this was what was fantastic is Sophia says the SPY low looks familiar. I'm buying the low and pushing through my comfort zone, right? 11:10, amazing. And so if I hop over here to the 5-minute chart, here's the 5-minute time frame, and we kind of trade about down here, and there's some bounce, right? There's the low, that familiarity. So when you're day trading, when you're swing trading, any type of trades, there are times where market cycles work better than others. There's no question about it. There's times where some traders really, really reap some rewards and some traders won't. This month for me and my swing trading style has been pretty brutal for short-term swings. I've still declined massively the amount of swing trades, short-term swing trades that I've done. And I've increased the amount of option trading that I've done regarding how much volatility that I'm selling. So I've increased that dramatically, and I've decreased this. And I'm glad I've decreased this because really all I've been doing is losing on my short-term swing trades. That's pretty much it. And if it wasn't for day trading, right, if I didn't have the ability, if I didn't have the knowledge to day trade, the last, really since the beginning, since February 1st, if I didn't know how to day trade, I would be getting just absolutely wrecked over the last 2 months. Now, long-term accounts, I don't really care about. I don't really pay any attention to those. It's long-term, right? You're thinking 100 years, 50 years, 1,000 years. You're just putting your brain out so far, it's literally irrelevant what's happening on a 5-minute time frame. I forget that I even have long-term positions most of the time. I don't even put it in my brain. But you have to have that flexibility. And it's like if someone says, well, Jeremy, I don't know how to day trade, so I don't know how to take advantage of this. That's salami, because you have plenty of opportunities to learn how to day trade, and it can be as frustrating as swing trading, because there are times, ready for this, here's what's funny, there are times where day trading can be a little bit of a challenge and swing trading is really easy. Then you're like, well, which one do I know which one to do? It's like, well, which one's working and which one's not? Right here, okay, in January, all of this, if it wasn't for swing trading, my day trading was going absolutely miserable. That's what's crazy. My day trading was terrible December and January of 2018, but my swings were doing phenomenal. Put sales, credit spreads, everything was just going great. It's all about the cycles. Cycles will change, markets will change, and I know the market rewards the specialist, right? So there will be times, regardless of what strategy you choose, regardless of who's teaching it to you, regardless of what company you're working through, it's irrelevant. I promise you, the greatest traders in the world, people who have more money than you can even fathom, like Bill Gates, Warren Buffett, Paul Tudor Jones, Ray Dalio, you don't think they are surviving billion-dollar swings right now? Because they are. They're going through billion-dollar swings. And when the market just gets absolutely crushed and it goes lower, they don't make tons of money, they hedge. They're losing billions a month. So you have to put that into some type of perspective when you're thinking like, oh man, I'm losing money. Are you losing billions? Right? Are you losing thousands of millions of dollars a day? No. Right? You're not. And they have detached themselves. Right? Because that's a great question. Christian asked, how do they sleep at night? They detach themselves because it's not about money to them. Money is just a number on a screen. And if you have zero emotional ties to money, if you don't really care what money is and you don't really worry about what it does and how it fluctuates, and you just know the power of compounding interest and what it is and what it can do for you and where to buy and where to sell, and you believe in your, like Blake was mentioning a moment ago, you believe in your system, you believe in your strategy, the money is just, it's just literally a figmentation of your imagination. It's numbers on a screen. So they sleep at night because they just don't care. They have a long-term perspective. They have an abundance mindset. And at the same time, their worst case scenario isn't that bad. That's the other very random, also slightly psychological part of trading, is understanding what is your real worst case scenario, right? Most people's worst case scenario is they lose all their money. That's as bad as it can get. And when you appreciate your worst case scenario, and once you realize that worst case scenario is not that bad, it's okay. Like, what is worst case scenario for them? Worst case scenarios for them is they lose hundreds of billions of dollars, but they still get payouts, they still get pensions, they still get, they still have houses already purchased in cash. They'll live off of $1 million a year of salary or whatever, some savings. It's not that bad. Their worst case scenario is not that bad. But they had to put themselves in that position in order to achieve that. So you have to figure out, what is your worst case scenario? Because I've already been through mine. I'll tell you, it's really not that bad. Right? My worst case scenario was I lost all of the money that I had, including other people's money, right? My dad's. I lost all of it. And that was worst case scenario. So once you figure out, really, what is your worst case scenario and what does your life look like during worst case scenario and how bad does it really become? Most people are afraid of that. That's the thing. Most people have a fear that is anchored to some kind of worst case scenario. And what they do is they are never able to break through that because, you ready for this? This is the other really deep part. I promise I'll get into day trading and trading in just a second, but the markets are actually kind of bouncing right now. The other reason that very, very few people will ever truly break through from that is the quote that people are often more afraid of their successes than they are their fear of failure, because they know what worst case scenario looks like, but they also have no idea what best case scenario looks like. They've never thought about it. They've never meditated on it. They've never even really planned it. I ask people, at least a new person every single day, what would you do if money was absolutely no object to you? If you could do anything that you wanted to do? And most people have like 3 or 4 pretty basic answers. I'd pay off all my debts. I'd buy my mom a new house, a new car. I'd have my cash, and that's really about it. If that's best case scenario for you, you're not dreaming good enough. So the crazy part is the traders and the investors and the hedge fund managers, they've accepted best case scenario. They feel like they deserve best case scenario and they're great with best case scenario, and they don't really care about their worst case scenario. They have no fear of their worst case scenario, and they approach and they know exactly what their best case scenario looks like, and they're going for that. They're approaching that every single day. They want it, they deserve it, they need it, and they love it. And they are accepting of it. So most people are actually more afraid of this than they are of this. And the reason that most people are more afraid of best case scenario than worst case scenario is because most people don't know what best case scenario even looks like. They've never thought about it, or they never give themselves the ability to dream. I know it sounds wild, but if people are like, I want to have a really nice house on lots of land. Okay, what does the house look like? Where is it located? In what state and or country and or city? How many acres do you have exactly to the number? How many dogs? How many animals? How many kids? Right? What are you doing with all of your time? Because if money is no object, you're going to be doing something every day. You're just saying, I'm just going to trade every single day. That's great. You can trade every single day. But if you're not making money now, you're not going to be making money then. If money is no object, you're just going to lose it all. And then, you're back at worst case scenario. So how do you protect yourself? How do you protect your money? How do you protect your capital? How do you grow it, in fact? And instead of being afraid that you're going to lose it, how do you embrace the excitement of growing it and helping other people. So, I mean, it's just, if you have the ability to focus on this, right? If you have the ability and the time and the mental capacity to focus on best case scenario and never worry about worst case scenario when you're trading, it'll slowly come to fruition. So that's kind of my thoughts.